Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 18th of February 2021. Right everyone, another day, another ETH all-time high. I can get used to this, right? I can get used to these all-time highs coming at us every day now. So basically we, I guess, peaked at about, 1930, 1928 on the chart here. Come down a little bit to about the 1900 level here, but yeah, a $1,900 Ether over the last 24 hours. That's pretty crazy, right? I mean, if you had told me that we would be at $1,900 a year ago when we were at $100, I would have said, no way, you're crazy. But we're there, right? And it just seems like we're going to keep going up here. And it's actually interesting. I saw this tweet from Key from CryptoQuant here, where CryptoQuant's like an on-chain data site. And basically on this chart, it's showing like the ETH price versus the inflows to exchanges. So ETH inflows to exchanges. And then down the bottom, the outflow transaction count for all exchanges. Now, I think, it's funny because you can look at the inflows here and you can see that, the inflows are flat, I guess, compared to what they were during, the end of the 2017, 2018 kind of bull market here. And now they're trending up a little bit, but not really. But I wonder if this is also affected by the rise of DeFi, right? Where ETH is no longer really, going to exchanges as much. It can be traded on DeFi for stablecoins, right? Within Uniswap and whatever other kind of liquidity pool you want to tap into. So I wonder if that's taking a kind of effect here as well. I think it is for sure because, we have like 7.7 million ETH locked in DeFi right now. A lot of that is in Uniswap. But a lot of it is also in Maker and Compound and Aave as collateral too. So, there's a bit of maybe a bit of investigative work that needs to be done there to see exactly what's happening with the ETH there. But still, you would expect if people were cashing out, quote unquote cashing out, maybe going to fiat or cashing out a large amount of ETH, they might still go to centralized exchanges. So yeah, it's interesting to see this, and like that chart of just the ETH price is pretty funny, right? You see like this massive kind of like collapse and then bear market for like 2 years, and now we just like skyrocketed back up. So it's just funny how like a bear market lasts for like what feels like an eternity, right? But there's not much that goes on in it. Like the price pretty much stays like range bound. I think in ETH's case, it stayed between $1 and $300 for like 2 years, and it only got above $300 once in mid 2019, which was short lived. But you can see like the vertical ascent here, which is what actually scares people. The price has gone up so fast. Within a year, it's gone from 100 to 1900, so 19x. And, people are starting to kind of get scared. It's like, is this a top? Like, have we gone up too fast? And I've discussed on the refuel before about top signals and things like that and how I think a lot of them don't work anymore. But at the same time, it's always good to stay vigilant, right? And like, I like looking at on-chain data, and that's why I do the Daily Gwei data pump once a month on the channel, because I think it paints a really nice story. So that's something I'll be keeping an eye on, to spot these kind of quote-unquote top signals. But at the end of the day, no one knows where the top is, and I don't think it's something that you really have to worry about. You should just be doing what's best for you at the end of the day. And on that note as well, the number of Ethereum addresses holding holding 10,000 ETH or more, which was $18 million last night. I think it's like $19 million today, but it's now at an all-time high. So you can see here on this chart from Glassnode that the last all-time high, I think, was 1100 and 30, I think, just eyeing it here, and we pretty much reached that recently, and that's the first time it's been that high since the end of the last bull market. It did get like almost that high again during, I guess, 2019 here, but then it trended way down during 2020, which is funny to see, but now it's just skyrocketed back up. So I think during 2020 a lot of people were, I guess, like underexposed to ETH, especially if they were chasing like Bitcoin and things like that. And then obviously ETH kind of woke up towards the end of 2020 and basically teleported to all-time high, which was pretty fun to watch, right? And because of that, we've seen like a ton of whales just start buying this up because, as I said, it's about $19 million today, 10,000 ETH or more, right? This could be not just 10,000 ETH, this could be like 100,000 ETH, for example, or it could be like 50,000 ETH. So it doesn't discriminate here. It just shows you everything over 10,000 ETH or more. but you know, and the people who can afford that are obviously whales, and they've been aggressively accumulating, as I said here, over the last 3 to 4 months, and you can see the price pretty much tracks this as well, right? So yeah, I wonder how long, you know, this is going to last. Are we going to keep going up? We're going to come down. There's only so many kind of addresses you can have here with a balance this large, because there's only so much ETH, right? And you know, if whales tried to purchase 10,000 ETH straight on market right now, it would push the price up not pretty rapidly or pretty high or anything like that, but it would still push the price up, and taking it out of, like, I guess, active circulation on exchanges and things like that also means that there's less ETH for people to buy, and it pushes it up even more. So yeah, really cool kind of chart here. I linked it on the tweet here, but I'll link it in the YouTube description for you to check out as well. So Reflexer Labs have gone live with their RAI stablecoin. So RAI is basically a stablecoin that is using a new mechanism called a PI controller to manage its kind of stability, and it's backed purely by ETH. So I think the point of RAI is that I think the creators were a bit frustrated when MakerDAO went to their multi-collateral DAI model, where it was basically, you know, not just ETH as collateral anymore. There was, like, you know, USDC and YFI now and a bunch of other tokens in there. And, you know, people were kind of upset with this. So RAI is like saying, we're going to do a stablecoin that stays kind of like stable based on this PI controller mechanism, and we're going to have it just backed by ETH. Now, I wonder how long it lasts like that. I wonder how long until they start adding other collateral to it, because in reality, you can have some collateral types that you can add to it that are just as trustless as ETH. I think, you know, Link is a token that's pretty trustless. In terms of, like, I don't think any more could be minted or anything like that. But at the same time, you know, if the Chainlink team said we're going to do a token migration, that'd probably go through, right? Because, you know, the Chainlink team is still pretty much like the core of it, and everything like that is very responsible for it. But I don't think that really kind of like matters too much. But yeah, I think I'm curious to see if RAI here stays like stablecoin only, right? ETH only backed stablecoin, or it starts to go to other kind of I guess, like, collateral assets here as well. But yeah, interesting kind of mechanism they've got going here. I'm not going to go through how it works on the refill. You can kind of read, I guess, their launch post, and Amin, who is part of the team, also has basically a post here that I think is about 20 minutes long. It's on my to read list. Basically, I haven't read it just yet, but basically it talks about, you know, what RAI is, basically the history of it, where it's come from, the history of the mechanisms it's using. I mean, you can see here on the video, like, the post is very long, and I'm pretty keen to read it, because Amin has been like an Ethereum community member for a long time now. He's pretty smart. He knows what he's talking about. So very interested to kind of read that. But yeah, congrats on the launch to the Reflexer Labs team here on this. I'm curious to see, you know, how stable this stablecoin, you know, stays, and the traction that it gets, because we have so many stablecoins now, right? You know, I think there's like, I mean, there's at least dozens of them. We're probably going to get to 100 plus of them by the time all is said and done. And I'm not just talking about stablecoins in general. I'm talking about USD stablecoins as well, because obviously we're going to get to, like, maybe potentially hundreds of different stablecoins when we start introducing different currencies into the mix as well, not just USD. But yeah, very interested to see how this goes, because mainnet is always, I guess, the best test for these sorts of things, because on testnet, you know, it's whatever, right? When you're on a mainnet environment, a DeFi environment that's like billions, if not trillions of dollars moving through it these days, that is the real test of your project, and especially of a stablecoin, I think. So the block here kind of put out an article that the Swiss Canton Zug, I think that's how you say it, which is, I think, the government, what is it here? The Canton of Zug is one of the Swiss Confederation's member states. They've begun accepting BTC and ETH for tax payments, which they initially announced that they'd be doing last September. So this is cool, right? I mean, I remember seeing this announcement last September and thinking, this is the next step, right? Being able to pay your taxes in BTC or ETH is amazing. I mean, I wish I could do that. I hate having to go to fiat to pay my taxes. I wish I could just straight up pay it in ETH, right? Because then I could keep this ETH within the ecosystem and do stuff with it, you know, within the DeFi ecosystem, and then just pay it pay my taxes with ETH, you know, pay my bills with ETH and things like that. So this is just the next step here. I mean, the Canton of Zug here basically is what's known as, like, I guess it's got like a nickname as being can't remember what it's called now, like a crypto kind of city or something like that, or a place where a lot of different kind of like crypto companies are. So I mean, it's only natural for them to take payments in tax because it is like a haven for crypto. So I'm not sure how long it's going to take for, I guess, like, the United States to introduce this, the rest of Europe, and where I am in Australia. I mean, I don't expect this to happen in Australia for a long time, if I'm being honest. Unfortunately, our government isn't very progressive on the technology front of things. But I could see this happening in some states. I think one of the states in the US is actually thinking about this already. Obviously, Switzerland is in Europe, so we're probably going to see some other European countries, if not kind of like, I guess, member states kind of introducing this. But I think, I don't know if there's any negatives to this. I think the government's just going to cash this to fiat anyway, but it lets people kind of like have a more easier time paying their taxes. And it might actually increase tax compliance as well for crypto, because the dirty little secret of crypto is that a lot of people don't pay their taxes or don't pay the right taxes. And I wouldn't say that this is all malicious. I think within crypto, on the tax front, there are so many gray areas, right? Like, how many things do we do in crypto that no one can give you a straight answer on? Like, even the basic stuff, like, apparently, according to some tax laws, wrapping ETH is considered a taxable event because you're disposing ETH for, like, wrapped ETH, which to me is just insane, right? Because that'd be like saying that, oh, we're going to tax you on your cash that you put into a bank account because you're, exchanging your I guess, US dollars for JP Morgan dollars, right? Because really, when you put your cash in a bank account, the bank gives you a digital version or a digital IOU of that money. And they promise that, if you want to withdraw your cash later, you'll be able to. And they promise that they'll always have like your digital version back one-to-one with your, the cash that you've put in. So that's not a taxable event. So putting your ETH into like wrapped ETH shouldn't be a taxable event either. It's the exact same asset. It's just a mechanism within Ethereum to make ETH trade like an ERC20 token, or be kind of treated like an ERC20 token by the network. And, I think we need more clarity around this. And it's just hard because there's different jurisdictions across the entire kind of world. Some are more progressive than others. Some tax crypto to crypto trades, some don't. And like airdrops as well. And like all the little intricacies of DeFi too. Like there was talk about, is putting your ETH into Compound and then getting CETH back as like an IOU asset considered a taxable event? And I mean, I wouldn't say it is, right? I wouldn't argue it is, because it's an IOU, right? If you have CETH, you can, or AETH from Aave, that basically gives you a claim on the underlying ETH. And yes, you might be earning like a tiny bit of interest on it, and that's taxed as income, right? At least it is for me in Australia. But I haven't exchanged my ETH for another asset. Like CETH is just an IOU token. So yeah, I think we need more progressive tax policies in general. But I'm really happy to see Zug kind of accept BTC and ETH for tax payments. Hopefully, other kind of, I guess, countries and places around the world follow suit here. So Instadapp announced their DeFi Smart Layer today, and they also announced their token. So in the post here, they basically kind of go over what this is, and it's supposed to be a management layer on top of DeFi. So they kind of describe it in the picture here, where users can interface with kind of DeFi through the Instadapp portal. They can already interface through different dApps and wallets, and the Instadapp portal is basically another kind of interface that sits on the rest of DeFi, essentially. So with that, you can kind of feed into these different things like managers and your owners and DAOs and multi-sigs, and then go to Instadapp smart accounts, which tap into the different kind of things on DeFi, which of course are built on Ethereum. So this is really cool. I mean, the Instadapp team's been around for a while now. They've been offering these tools for a while now. Just make it easier to use DeFi, both with kind of their kind of smart accounts, which they introduced a bit later on. But originally they had like different functions that you could use. Like you could basically recursively go into like a CDP with just a click of a button and stuff like that. So they've been building some really cool tools here. And they're also going to be working with Layer 2 to drive adoption there, which I thought was really cool. And finally, they introduced their governance token, which will kind of like act as governance for the entire platform, for funding ecosystem development, fee capture, voting on which protocol should be whitelisted, things like that, right? There wasn't too much information here. Basically, the distribution is 45% goes to the initial team, investors, and new team members, and 55% will go to the ecosystem growth, including liquidity mining, new ecosystem partners, developer mining, and delegates here. So they expect the token to launch in March, and apparently detailed information is coming soon on that one. So yeah, I mean, I think at this point, like people ask me all the time, will this app have a token? Will this thing have a token? Will that thing have a token? I'm going to go out on a limb and say that it's safe to assume that every single thing is going to have a token, right? And I don't know if that's good or bad. I don't know if it's like kind of just a something that should or shouldn't be done, or it makes sense or doesn't make sense. I think a lot of it actually doesn't make sense, if we're looking at it from a 2017 lens of just like pure utility token, right? For those who were around in 2017, you'll remember that there were tons of ICOs with white papers for these tokens that hadn't been thought through at all. No one knew what they were going to do. They were kind of useless. They weren't even governance tokens. They were literally called utility tokens, but they had no utility. They couldn't do anything. And they normally just added friction to the user experience. Whereas now we have a lot more than that, I think, with tokens, right? We've experimented a lot more. We have tokens that are basically, I guess, like equity that you would have in like a company, right? Where they have fee capture, they have governance rights, they have a bunch of different things like insurance pools have, like in Arve's case, they have like a thing where you can stake and you get added to like an insurance pool and you kind of earn rewards for that. So there's a bunch of different mechanisms here for sure. But, I guess like it is the cool thing to have your own token now. And I'm not saying that Instadapp should or shouldn't have a token. I think just generally, if you're like, people ask me if something's going to have a token, I would just assume yes from now on. Yes, it will have a token sometime in the future. Most likely they're going to have an airdrop to past users. So go out there and use all the DeFi apps that you can, right? Even if you don't get an airdrop for a while, the fact that you've secured your spot because it's forever on chain, I think is worth it. I mean, I've personally done it. I use a lot of DeFi apps anyway, but any of the things that I hadn't used too much of, I went and just played with it. And you actually learn things as well, which is really cool, right? You get to play around with an app that you hadn't played around with before and learn all the intricacies of it and learn how it works. And kind of like, maybe you end up as a user of that platform anyway that you might not have used before. So yeah, definitely smart to do that in this day and age, because I can tell you that everything that doesn't have a token right now is going to have a token. And that's not me knowing anything kind of like specifically myself. I'm just assuming based on what we've seen that, pretty much everything that didn't have a token has introduced a token. And there's only a few things left now. I guess among the top DeFi apps, there's only a few left that don't have a token. So yeah, safe to assume most of them will, I think. So 0x put out this thread today that was really cool, going over like the 0x universe, which they believe is, which they say is kind of bigger and more liquid than ever, which is actually true because, I've spoken about 0x before and their traction. They're actually like the third or fourth kind of DEX as measured by volume now. They have like an entire ecosystem that they've built around Matcha, which is their kind of decentralized exchange aggregator, which I actually really enjoy using. And I really like this picture here. So for those of you listening in, you won't be able to see this, but I really love this. Like, look at that. That's just an awesome way to visualize what 0x is. And, you can see down the bottom, 0x is like this massive planet of like liquidity that feeds into this API. And for those of you that don't know this, if you're not a developer, an API is just like an interface for kind of everyone else to talk to, right? So the 0x API consists of like the liquidity pools that they've got and like the smart contracts that they've got and all this sort of stuff going on, right? So that's what kind of developers can interface into, and that's what 0x can interface with the other kind of apps with as well. So you can see here that they've got the supply and demand side. On the supply side, they have all the different kind of exchanges on Ethereum that they tap into to aggregate. And then they also have the market makers that they're using. As I've spoken about on the Refuel before, 0x has a permissioned market maker kind of platform where they onboard these big market makers that will provide liquidity and then get paid fees for doing so. And then the users get to access this on Matcha, which I thought was really cool as well. And then on the demand side, as I said, you have like exchanges like Matcha, but also all these other exchanges that can tap into 0x liquidity as well. You have wallets like MetaMask and IM Token that can tap into this, options and derivatives, portfolio managers, right? Prediction markets, like basically anything like that can exist in DeFi can tap into 0x's API here, which I think was this was a really cool way of visualizing it, basically. But they've got a thread where they kind of break down what this is, kind of their traction here, how they tap into different exchanges. I mean, it's a pretty long thread. It's about 19 tweets here, or I think 20 tweets. About 20 tweets there. They've also got like a blog post here you can check out as well. So I'll link that in the YouTube description, of course, for you to go check out. But yeah, I love this infographic. Like I think that we should have more of these infographics kind of made for Ethereum in general, because they're just really nice to look at. And I think they do a very, very nice job of visualizing the entire ecosystem. And this is just 0x. I mean, you could imagine having one of these for each DeFi protocol and how everything kind of connects to everything, kind of visualized to make people really understand that everything is kind of like composable with each other, right? There is no silos. Like if your protocol is open, like if there's no whitelist on your protocol, for example, you can talk to any other protocol you want on kind of like DeFi, and then any other protocol can talk to you. So I thought, that is like Ethereum's superpower at the end of the day, the composability, the money Legos. And I thought this was a really nice way of visualizing that whole kind of ecosystem there. So EthGlobal has announced another hackathon, but this is a much smaller one than their scaling Ethereum hackathon. This is called NFTHack, and it'll be taking place from March 19th to March 21st. Obviously, NFTs are really, really hot right now, so this is really timely. I think it's really great. I mean, as I said, this is a short hackathon, 2-day hackathon, open to all creators and builders, of course. You can start registering now if you're a developer here. I really like this website as well. Look how cool this is. And they've even got 10k ETH here, I think. Or maybe not. They got 10k available in various prices. Okay, I got ahead of myself. But I'm going to say that that's them saying, ETH's going to 10k. I'm just going to take that one because that's the first thing I thought of. But anyway, I really like the way they've done this, because what EthGlobal does is that they don't just like hold these hackathons and like kind of boring or whatever. They actually create a whole theme around it as well, and make sure that the builders feel valued and feel like they're part of like more than just like a hackathon. Feel like they're part of a community too, which is something that EthGlobal does that none of the other kind of, I think, events or kind of hackathons kind of do. So I really, really like that. But yeah, just on the NFT note here, I mean, it's everywhere right now, right? It feels like it's in a bubble, but I don't know if it is, because, and I was on a Clubhouse kind of chat today, and there was a guy called Whale Shark on there, and he's basically a pretty big kind of NFT collector, has a fund of NFTs that I think he has a token for that people can kind of be part of, and it's like a DAO sort of model. But he was talking about how, NFTs probably aren't going to follow the bull and bear cycle of crypto, because if you think about collectibles in real life, do they really follow the bull and bear cycle of the macro environment? Whenever we have like a 2008 crisis, right, financial crisis, or a COVID financial crisis, do collectibles, suddenly become like worth way less than what they were? I don't think so. And I don't think people are scrambling to sell their collectibles during these kind of boom and bust cycles either. Like in a bear market for like stocks, people aren't really going to be selling their collectibles, right? Like for me, with my Pokemon card collection, which I've spoken about before, I haven't sold that during any time. Like even when I needed money for something, I that's not something I even thought about selling, because I didn't want to part with them for starters, and because it's just like it's removed from the wider kind of macro environment, I think, as well. So, I don't know. I mean, I know there is kind of like a bubbly feeling to this, and it feels like people are coming in, just making an NFT of anything and making money off of it. And that's probably not going to last, let's be fair here. But the real kind of things, like I think CryptoPunks, I think kind of hash masks, I think Axie Infinity, stuff like that, I think they're going to be lasting. I don't think, like CryptoPunks especially, like for those who haven't been following that whole thing, CryptoPunks is the first NFT on Ethereum and was out since 2017. You can't replicate that. You can't buy that. You can't go back and mint an NFT for the first time, right? Or an NFT project for the first time. So just based on that, it's going to have a lot of value. And I don't think people during a bear market are going to be scrambling to sell their CryptoPunks just because, it's a bear market. So I think Whale Shark brought up some really great points there. And something that I hadn't thought of previously. Like I kind of saw this kind of bull market playing out with NFTs, and I'm like, wow, this reminds me of ICOs from 2017. I know how this ends. But I mean, it is different because NFTs are not very liquid either. So that's another thing to consider, where they're not very liquid by nature because they're unique. They're non-fungible. I know there's projects like NFTX that is trying to bring fungibility and liquidity to NFTs by wrapping them, but I still think that that's not going to make people want to sell even more. So we'll have to see how that plays out. But this is the first time I think we've had a bull cycle where NFTs are actually at the forefront. So I'll be curious to see what the NFT space looks like during a bear cycle. I think it's just going to be just as kind of like, not just as heated with money, but like in terms of attention on it, I think it's something that persists because it is not just a pure market phenomenon. It is not just pure kind of, I guess, speculating on the token, right, and things like that. It's more about like, I guess, the creators, right, and the creator economy, and people supporting their favorite creators and wanting to own something like a piece of art, like a piece of digital art that they really enjoy, or wanting to own a CryptoPunk for various reasons. So we'll have to see how that plays out. I think it's something important to consider and something important to think about and keep top of mind when you're kind of investing in this stuff. And again, that's not investment advice, and I'm not going to say that things aren't going to crash or whatever, but, you know, if you're buying NFTs, just know that they are super speculative, but they may not follow the bull and bear cycles of the macro environment. So if you're trading them, you know, you might be trading them based on like a different kind of a strategy there, but yeah, totally up to you how you want to play that one, I think. All right, last up here, we have Pool Together with their token. I was just saying to you how, you know, just assume that any project that doesn't have a token right now will have a token in the future, and that's exactly what happened here. Pool Together's token is obviously called Pool. It was released. There was an airdrop, of course, so if you had used Pool Together before, you got a bunch of tokens, and you can go trade them if you want on Uniswap or provide liquidity and stuff like that. They've got the distribution breakdown here. They have 80% of the tokens actually allocated to the community, with 12.44% to advisors and employees and 7.5% to investors. So this is actually a really, really great distribution here. 80% to the community is very heavy, right? Which I really like. So they've also so they broke down the distribution kind of here, with most of it going to the community treasury, of course. And this is how we did it with the index co-op. We basically put it into the treasury, and then the community can decide what happens to it, which I thought was really cool. And then they've got like future distributions here, next steps. I think they have like a liquidity mining program that they might be doing, if I read here correctly, as well, which kind of makes sense. Yeah, I think, what is it, this, no, I don't think so. I think maybe, I guess, like, the treasury might, the community might vote for the treasury tokens to go towards a kind of, liquidity mining program, which would be cool to see as well. But yeah, for those of you who don't know what Pool Together is, because it's not, I guess it's not a project that gets talked about too much, but it's basically a no-loss lottery. So what happens is that in the Pool Together kind of contracts, or in the pool, you can put in your stable coins, for example. So say you put in like DAI, that gets lent out on money markets, and the interest that's earned on that basically gets put up for like a lottery. So each week there's a random kind of person pulled out, or a random address pulled out of that. And each week the person that wins the interest. So they don't win the whole pool. They don't win the DAI that you put in, the principal. They just win the interest that was earned. So that's why it's called a no-loss lottery, where you don't lose your initial principal. You're only technically losing out on the interest you would have earned by not being in here. But the interest is like your ticket to winning kind of the prize each week. So, and it's not just limited to stable coins and things like that and prizes around that. There's also sponsored pools where people can put in tokens, and they could be won as well by pool participants. So yeah, definitely a pretty cool money Lego that I don't think has been, has been explored too much yet. And I'm just kind of reading here. I think 5% of the tokens have actually been distributed to all Pool Together depositors, which means this is probably a liquidity mining program here. Yeah, definitely is. So there's already a program going on, which I think, this is funny. Like, this is very similar to what we did with the index co-op, and not to shill it too much here, but we did most of the tokens to the treasury. We did a small liquidity mining program to start. The team, there was no investors, but the team got 30%. So if you add up the team and investors here, it's a bit more than that, I think. And then the distribution's a bit more. Like, they did 14% distribution. We did kind of like 1%, I think. And that's because we did the airdrop to DeFi Pulse index holders. And at the time, DeFi Pulse index was like 1 or 2 months old. So, but yeah, it's cool to see these kind of like community heavy distributions, especially into the treasury. I think that's the best way to do it, right? Because if you just airdrop 80% of the tokens to the community, all that's going to happen is that like everyone's just going to dump it, right? And the people who buy it up are going to be these whales, and it's just going to be like very centrally controlled. So if you do like a community treasury where the token holders can actually vote on what happens to the tokens in the treasury and get paid out over time, I think that's a better way of doing it. It's a much healthier way of doing it. You get a better distribution like that. The price isn't really isn't too affected by that, especially if you don't have like a pool 2 or an incentivized trading pool for the token. That can also work too. So yeah, cool to see this. And yeah, I guess like congrats on Pool Together to getting their token out. And as I said, more of these are coming. So go on the, if you want an alpha leak, just go on DeFi Pulse, go down the list, see which protocols haven't had a token yet, and go play around with them because you might get an airdrop out of it. You never know. All right, that's it for today's episode, everyone. Thank you again for listening and watching. If you haven't done so, give that video a thumbs up, subscribe to the channel, join the Daily Gwei Discord channel, subscribe to the newsletter, and I'll catch you all tomorrow. Thanks, everyone.